and it'll end up showing at the end of when I stop the recording, and then it'll be posted in the room and you can download it. Okay. So first week for a lot of you guys, and I realize that everything can be can be a little overwhelming, like what we're trying to do, but it's really very, very important that you understand exactly what the path that we're on here is. And I like to always use the analogy of building a house, right? Or steps to building a house. Okay. Let's see if I can. I probably should have done some research on it. Okay, so there's 10 steps to building a house, right? You one, prepare the construction site and pour the foundation, right? So you got this big chunk of land, and it's like got trees on it. It's got hills. You have to get rid of the trees. You have to level the ground, and you pour the foundation, right? Now, next step is you complete a rough framing, which looks like that. The next step is you complete plumbing, electrical, HVAC. Then you install insulation. Then you complete drywall and exterior fixtures, right? Then you do the other things like finish mechanical trims, bathrooms, install mirrors, showers, doors, and finally you walk through. Now, the thing with learning to trade, it's very much like this. And where you guys are is you're just preparing your construction site and you're about to build your rough framing. So as you watch the videos, you may think, oh my God, where do I hang the mirror? Where do I put this light in my kitchen? Right? What color do I paint the wall? Right? Which is basically, how do I make money from trades, right? And you're so far away from that right now. Right? You're so far away from that right now. And you have to understand that this is really, really important. Wilson, welcome. Please make sure you mute your microphone, please. And you're so far away from getting to that point where you're actually trading, okay? And by the way, guys, you mute your microphones by pressing this button down here. Wilson, can you mute your mic, please, my friend? Thank you. Okay. All right. So do you guys understand that? A lot of anxiety in the beginning comes from you want to know where to put your couch. Where do you put your TV? Right? And you're so far away from that point of actually placing trades, and you're still, we're still leveling the ground. We're still getting rid of those old habits that you have. We're teaching you to rethink about the market in a very, very different way. So if you could imagine trying to hang a mirror before you even had the construction site, it leveled, or you completed your frame. It's ridiculous, right? So I want you to not get too anxious about the questions that you have or the concerns that you have. You're doing the exercises because in order to become a master builder, in order to become a master trader, we must first master getting rid of the trees, leveling the ground, master pouring the concrete. Okay, then we have to get to the next step of being a master framer. Then we have to be an electrician. Then we have to learn to do the plumbing. Then we have to learn to do the drywall. Okay, so it's very, very important that we chunk these things down, and you just accept that this is not about learning to trade in the first 5 lessons or 6 lessons that you're going to go through. The first 5 or 6 lessons are building the foundation to retrain your mind how to do the critical elements that need to be done before we can get anywhere near close to moving into our house and making money from selling our finished product. Does that make sense, guys? Are you guys in understanding of that? It's really key as you're learning the first lessons, okay? So the very first lesson that we're doing is basically retraining our brain to follow what the big money is doing, right? What the big smart money is doing, because you know institutions and market makers and floor traders and algos, they can hide a lot of stuff from us. Okay, they can hide a lot of information from us, but the one thing they cannot hide is what price does. And that is why learning to read these 1-minute charts, okay, and learning to read the order flow using the spreadsheet that you have is the first steps to clearing the ground, laying the foundation, figuring out what the institutions are doing, right? You can hide everything. Clearly, somebody big was buying this asset, right? Clearly somebody big was buying this asset, and they were accumulating this asset the entire time. Now, by me teaching you how to read the order flow on a 1-minute chart and then extrapolating that information to a 15-minute chart or a daily chart, we're going to watch and see, who's in control of the market, how much control do they have, and how is that market moving, because they can hide everything, but clearly they bought value here, 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 and that is why the stock is now $21. They knew that was going to happen long before this happened. And they left a footprint in the market that shows us that they knew this was going to happen, right? So whether we're on a 15-minute chart or whether we're on a 1-minute chart where we're going to see a lot more order flow over a large sample size, we're retraining your brain by doing the spreadsheet to see what they're doing, and so price is everything, right? You can't even trust volume too much, because even volume can be hidden in dark pools. The crosses on dark pools are absolutely insane, right? The amount of dark pool crosses is nuts, right? I recently signed up for a software program that I'm testing out right now. I'll show it to you guys right now. I always buy things. Don't take anything that I do. Like when I show you guys I'm doing something, don't take it, oh my God, I got to rush out and get it. Okay, I'm constantly improving my toolbox. I will constantly go and look at other educators. I will constantly go and look at software. But one of the software that I'm using right now is something called Flow Algo. And this software is really, really cool. I'm finding it somewhat useful, because what this does is it shows large orders, large options orders. Okay, and you can see they're showing the large options orders right here, which tells me a little bit about what the market is doing. The other thing that it does is it shows me these block pools. Okay, so you can see here, these are equity blocks of dark pools, and these are trades that are not being reported. This is volume that's not being reported, and they're crosses. Okay, they're crosses that happen with large orders that you don't see these on the charts until much later, right? So if I just filter like something like Apple, doesn't show dark pool prints. Okay. Hold on a second. Forgive me, guys. I tried to hit the mute button there before I sneezed. So it's not a good example here. Let me just show equity levels, dark pool prints. It's here somewhere. Let's see if I can find something here. Let's go to these dark pool prints. You can just see the number of dark pool prints that are crossing here. And look at the size. CRM, $166 million order went through on CRM, 750,000 shares, right? So if you go to CRM, let's just take a look here, and you go to the end of the day, this is showing 75,000 shares, right, at the end of the day, but 750,000 shares were crossed. Do you see that? That's a massive order. That order is not going to show up until Monday morning, right? Now, I don't know the exact rules anymore on equity blocks and dark pool prints, right? I don't know the exact rule on dark pool prints anymore, but basically you can't even trust volume very much anymore is what I'm trying to tell you, okay? All right. So I'm always buying stuff like that. I'm always testing things out to see if it's of any value and it can be added to my arsenal. If it is, I promise you I will tell you guys about it, and you don't have to rush out and get it. Most of the stuff like this that I buy or test, or when I even look at other educators and things like that, it's just curiosity, right? I'm just like that. I'm one of these guys that I've got to constantly learn, and it just keeps me really, really sharp. But at the end of the day, everything that I do is all based on order flow, okay? So getting back to what this lesson is for you guys, which is a basic lesson. The only thing that we can trust are what you're doing in your spreadsheets, okay? By answering the 6 questions, right? By answering your 6 questions in your spreadsheet, by answering these 6 questions, who's in control? How much control do they have? What should I be doing? How aggressive should I be? Where am I wrong about being this aggressive? And where am I wrong about the entire day? Right? By answering these questions is going to accomplish one very, very, very important task. And what is that? What is that answer? I want you guys to give me your best guess. What is the answer that we're trying to do? What's the foundation? We go back to that foundation analogy of building. What are we trying to do right now? What are we trying to do by answering those questions? What do you think the goal is? Is it to find you trades? By doing the order flow spreadsheet, let me ask you this question. Is the goal to find you trades? What's the goal? Okay, so the answer is, Eric says, find out who's control. You're sort of right. Vince says, retrain your mind. You're sort of right. Drew says, find non-randomness. You're sort of right. Okay, so those are all correct answers, right? By doing the order flow, the most important thing that we're doing, the absolute most important thing we're doing, is avoiding randomness, right? That is the most important thing we're doing, because within within the first 30 minutes of a day, I do not want to be spending my time following assets that are far too random, because there's can't make money in randomness, right? We've already proven that by looking at the frequency distributions and the math behind the trades. It's impossible, and we know that 88% of the time, we know that the market, that a stock, a individual stock, is random. And we've already proven that by looking at the math, the actual quantitative math of the frequency distribution. We've already proven that, right? You got, is anybody in disagreement with the math about 88% of the time an individual stock is random, right? And we don't want to be trading in randomness. We want to be trading in a market that that you can find a directional edge, right? Now, you could argue that you could find a directional edge in randomness. Like this market is very random right here, right? CRM. You can see it's pretty random on this day, right? Buyers are in control. It comes back down to moderate value. Buyers, they remain in control. Buyers remain in control. Buyers remain in control. So you could argue that you could have bought moderate value right there, right? So, but that still told us, this market still told us that buyers were in moderate control. But this is still not even a good market to trade, because you know it's still a bit too random for me, right? Now, unless I had some other read on this market, some good fundamental reason to believe, like let's say, just to give you an example, whatever that read could be, let's say that on CRM I saw that there was a very large, whoever has your mic on, please turn it off. Somebody has their mic on. Lynn, please turn your mic off. Thank you, dear. Let's say that I saw, you can see here, at 10 o'clock, a 457,000 order, a block order, went off on calls on CRM. That's a massive order. Right now, again, I don't want you to get caught up in this, because this is not important at the stage that you guys are at. You're not ready to use this type of tool yet as an edge. But you can say at 10 o'clock, a gigantic order went off there. So let's say that I wanted to trade CRM because I had some fundamental or some other reason. Buying moderate value was the way to go, right? But ideally, that's not what your goal is in the point of where you are right now. You're at the point right now where you've got to avoid randomness like the plague. You've got to avoid randomness like the plague, because the more random a market becomes, the harder it is to make money from it. Okay, guys? All right. So the order flow spreadsheet is to, number one, help you avoid randomness. And what were your other answers? The other answer is to retrain how you think about the market, right? So you're nowhere near making money at this stage of your education. You're just trying to figure out, is this stock random? Yes or no? Because I want to stay away from random markets. I want to go to where the easy money is, okay? And that's what I want to drill it into your mind right now. I'm going to write something out here, and I want it to be your motto. It is much better to be rich than, I'm probably going to misspell than it is to be smart. Okay? That has been my motto most of my life. It is much better to be rich than smart. Now, if you were to go down on the floor back in the day when the floor existed, no disrespect to my brothers on the floor, but 80% of those guys did not go to college. and they didn't graduate. A lot of them didn't even graduate high school, right? The guys that worked on the floor were not the sharpest tools in the shed. All we did was follow big money, right? We let the big guys with really deep pockets and with large amounts of money, we let them be smart. We don't want to be smart. We could never compete against Goldman Sachs. We can never compete against, the big smart money. But what we can do is we can follow what they're doing. Let them be smart. We want to be rich. Okay? So when you engage in randomness, you have to be smart, right? But when you engage in non-randomness, when you engage in very clear, easy to read order flow like this one right here, right? Very easy to read that order flow. It's very easy to find a good trade in that. It's very easy to find a good trade in this. When you're engaging in non-randomness, it's better to be rich than smart. Okay? So by retraining your brain and by looking at the market through the eyes of the order flow spreadsheet and of course all the other stuff that we're going to add on in the first 5 or 6 or 7 lessons, right? Then you're going to learn how to make money. I don't want you to be smart, right? I don't want you to be a smart, brilliant trader and be thinking about everything. I want you to be rich. Okay? Okay. Wilson, do you think algos and HHT trading during lunch hours change anything? You're overthinking, okay? So Wilson's asking me a question right now. What do I think is going to happen during lunch hour? And does the high frequency trading change anything? Stop thinking too much, okay? Overthinking is being smart. I told you it's better to be rich than smart. Just follow that fucking order flow. That's not directed at you, Wilson, right? Just follow the order flow, do the work, and print money, right? That's why I don't want you guys using tools like Flow Algo as an example. Yes, this is really, really valuable information in the right hands. In the right hands to somebody that doesn't know the basics of how to clear the ground, how to remove the trees, lay the foundation, how to know what to look for with what floor traders, algos, market makers do. I got to teach you all that first, right? And then after you get that, you can use more advanced tools. You can trade more advanced situations. You can trade, B quality or moderate value trades or even passive value trades. But the steps right now is to make you rich first. Double your accounts, triple your accounts, play with house money. And the way we do that is by avoiding randomness. Does that make sense, guys? Right? It is better to be rich than it is to be smart. Being smart costs me a lot of money. When I go and try new things out like this, right? Or let's say I want to learn something new or I want to add something new into my arsenal, it costs me a lot of money because I have to experiment with it. And it takes me a while to incorporate all those things. And I want to assure you, I'm constantly doing that, right? So by you guys taking my coaching, I've saved you literally 20 years of going and buying and trying and doing other things and testing other things and random. I'm like a with trading. I'm like a mad scientist, right? I'm always, well, maybe that'll add a little bit, or maybe this will add a little bit. So there's times I'll go and try things for months and years at a time, right? and I'll back test and retest and live test and forward test. So what you guys are getting is the boiled down version of not how to be smart, but how to double, triple your accounts in the coming weeks and months. Okay? And we do that by learning the foundations first and foremost. And the number one step to doing that is avoiding randomness. Okay? So by doing the order flow spreadsheet, the goal is not to find trades. The goal is, number one, to avoid randomness. And number two, the second most important goal that we're trying to do is to retrain your brain to see the market through the eyes of the floor traders, market makers, and even the algos. You might say, Steve, how can I see the market through the eyes of the algos? How can that be possible? Because what do you think an algo is? What do you guys think an algo is? All it is a computer program that was programmed by a human. 90% of the algos that are out there right now were modeled on the floor trader business model. Seriously, I'm not joking. Like it's nothing more than that. The algo just did what the floor traders did in nanoseconds. Now, to be completely honest, most of the algos are doing what the market maker does, okay? The big algos, and there was a difference between what floor traders and market makers did, slightly, but the business model at the end of the day is the same. Gauge the order flow, build a book in the direction of the path of most least resistance. That's it. That's all algos do, guys. Okay, I'll sum it up for you. All an algo does is it reads the order flow and it builds a position in the path of least resistance of liquidity. Okay? That's it. That's all it does. So you might say, well, how do I know what the algo is doing? I know exactly what the algo is doing because it's doing what the floor traders and market makers and the desk traders always did. It just does it a lot faster, and it does it in nanoseconds for smaller profits. That's it. That's all. Don't overthink it. Okay? The business model that I'm teaching you guys in the first 5 or 6 lessons is going to help you understand exactly what the algos are doing and why they're doing it and what you should be doing, because it's all based on the floor traders and market makers and institutional desk traders. Okay, in the vast majority of time. An algo, all the algo's doing is it's measuring where is the path of least resistance on the buy side or sell side. So when you see the market going lower like this and then press lower, what this is doing is the algo is just saying the path of least resistance is lower. And all it's doing is measuring what's low enough, what's high enough. So it will buy here, it will sell here, it will buy here, it will sell here, it will buy here, it will sell here, it will buy here, and it's measuring this constantly every nanosecond. That's all an algo's doing. It's measuring what are the bids above the market, where's the offers below the market, where's the liquidity sitting, what are the current market orders flow that's coming in, and it's just taking the path of least resistance and it's building a book slowly. So when you see the market do something like this, basically what the algo has done, you can see it in hindsight, right? But basically what the algo has done is the algo saw that the path of least resistance was lower. So it started to build short positions right there. That's what it did. It measured the pressure in the market. It built a short position. Then what happened is it bought here and closed some of its shorts. So it sold here, bought here, closed some of its shorts. It then added to its short position right there, right? And then as it went lower, it closed some of its position right there, not all of it, right? So it's buying, selling, buying, selling, buying, selling, buying, selling. It's measuring the order flow, right? It then closed more of its position right there, and then it just added to its short right there. Now, it's very easy for me to see that in hindsight, right? The algo was doing this in real time and making adjustments in real time as it went along. That's all it's doing. That's all an algo is doing. And if all of a sudden a big fat order came in, let's say somebody parked a giant order to buy right there. Let's say some big institution parked a giant order. This wouldn't have happened. The algo would have adjusted to that order, and what would have happened is the algo would have done this, and you would have seen that happen instead, which is kind of sort of what happened, right, the next day. And the algo saw a big order there. So we can never know the future, but we can look at what the algo is doing. We can look at its business model and know how it does what it does and what it looks like when it does what it does. And that is what the order flow spreadsheet is teaching you to do. Okay? That is exactly what the order flow spreadsheet is teaching you to do by answering the questions, and then by tracking it, it's teaching you to rethink about the market. Okay. Now, of course, the order flow spreadsheet in itself isn't enough. You need other things. But the bottom line of what that order flow spreadsheet, the final thing, the final conclusion that I want you to understand about the order flow spreadsheet, and the final thing that it does is it helps you avoid randomness. It teaches you to be rich, not smart. Retrains your brain to see what the algo and market makers are doing. And the final thing that the order flow spreadsheet does is it keeps you on the side of smart money. Okay? Smart big money. Just by doing the order flow spreadsheet, you guys will stop losing money tomorrow. Just with that alone. Is it enough to make you a lot of money? No. But as long as you trust who's in control, how much control do they have, you're never going to be on the opposite side of smart money and prone to a squeeze. Does that make sense? So that is what you should be learning in the first 3 to 4 lessons. And you keep these, it's not to find you trades, okay, guys? It's not to find you trades. It's to help you accomplish avoiding randomness, get on the side of smart money, and retrain your brain to look at the markets through what the floor traders, market makers, and even the algos do, so that you can be rich, not smart. Okay? So when you're asking me questions and you're learning the next 3 or 4 or 5 videos and you're going through those, keep it in mind, okay? This is what we're trying to accomplish. We're trying to get rid of the trees, level the ground, learn how to put down the foundation, and put up the frame. Okay? We are nowhere near using it to trade yet. Okay, so that pretty much sums up everything that I wanted to do. I wanted to capsulize it all. Do you guys have any other questions? I'll just wait for your answers as you're typing them. So I would ask you if you can expand yesterday on Intel at 15 o'clock. Okay, so we'll answer that question. So Eric is asking me today to look at Intel today at that time. That's a good question. Okay, because you should have been watching Intel, right? That's a very good question because this is, by looking at this order flow, this is a stock that you should be interested in, right? You guys agree? This is where we get rich, not smart. Right? So it's a good question, Eric. It's a good question, right? Because your question is in the right context. What are we doing here? Okay. Now, you're asking what happened here. Okay, what happened there? I have no fucking idea, and neither do you. And it doesn't matter, right? It does not matter. Why doesn't it matter? Right? Why doesn't it matter? Because this is a stock that you want to be trading, right? But what does it matter if, let's say, you took a short right here, which I would have said would have been a good short, right? Let's say you got short right here on Intel, and you're in that trade. Now that would have been a decent trade to trade, right? Yeah, it's a fairly decent market. It's non-random, right? So all of a sudden, boom, boom. This is why in the next lessons that you're going to learn down the road, you must absolutely, this is actually a really good question, Eric. You absolutely, I can teach you the right markets to be in, but I can never stop events like this from happening. Do you understand? Never. Shit like this is going to happen all the time. It's the nature of the business. We're in chaos, right? And that's why in later lessons, I'm going to drill into your mind. I'm going to teach you the most powerful money management in the world. And I'm going to drill into your mind the importance of using stops 100% of the time without exception. Okay? Okay? So the answer to your question is yes. This would have been a trade that I would have found myself in, right? But I would have had a stop on that. So I really don't give a shit. Now, to be very honest with you, there probably would have been slippage on that. And yeah, that would have been painful. That would have been painful. There's no doubt about that, right? I would have actually loved that short right there, right? But that is just the nature of the business. Stuff like that's going to happen to you once every 200 trades, right? Once every 200 trades. And the point is that because I never compromise, because I instantly, within nanoseconds, I put a stop on every single trade, I wouldn't have really cared. I would have lost more than I would have wanted to in that situation. If I would have had $250 risk in that situation, I probably might have even lost $500 on that trade. And yeah, that would have stung like a mother, right? That would have hurt. I wouldn't have been happy about that. But there's no way we can know that those things are going to happen. It's impossible. It's the nature of the business, right? So it's a good question, but the answer to it is I really don't give a shit what it did, because I know that that I have the best money management in the world, and stuff like this is going to sting. I'm going to lose a lot more than I want to. I would have wanted to lose $250 on this, and I would have lost 500, maybe 700, but I can recover from it because later on I'm going to teach you the absolute best money management possible known to mankind to make it sure that you never go broke from risk of ruin. Okay? Any other questions? Good question. Anything else? Yeah, I mean, obviously this was a misclick of some type. This might have been some news, right? But the sellers were always in control of that market, weren't they? Shows you how powerful our order flow spreadsheets are, right? We knew. Now, I would never trade that because it violated my where I was wrong, right? But it shows you how powerful staying on the right side of the market. Did you do an order flow spreadsheet on that, Eric, by chance? Do you have that? Just out of curiosity. And did you post it in the room? Let's take a look here. Maybe Eric did. Did you happen to post that in the room? Let's see. No, you didn't post it in the room, but anyway. Right? Okay. Okay, guys. So, find when you use terms like buy, passive, moderate, aggressive, and how do we find price points? It's Wilson, send me their homework. The only way you're going to do it is sending me the homework, okay? You got to do it. You got to send the homework. If I see you're doing the homework wrong, okay, then I will let you know. All right, guys. So that's it for today. Good group lesson. I hope you enjoyed that. I'm actually going to use this lesson on my YouTube video, but as a YouTube video, because I really didn't talk about anything too proprietary today. But it was a good general lesson on the whole point of what you're going to learn from me in the first 5 lessons, okay? Avoiding randomness, retrain your brain to see the eyes through the eyes of a market maker, floor trader, and the algo, keep you on the right side of the money, and teach you how to be rich, not smart, okay? Okay, guys, bye for now, and keep the homework coming.